Good morning, it's Monday the 10th of October and as always we're back at Atlantic Capital Markets with our roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with the release of the Eurozone's investor confidence figures. On Tuesday, we'll hear the current state of employment here in the UK, which we'll talk about in more detail in a moment. And on Wednesday, we'll hear the latest Australian consumer confidence, the GDP figures in the UK, and PPIs over in the US. And Wednesday also sees the release of the minutes from the last meeting of the Fed, which we'll discuss afterwards. Thursday sees the release of the latest inflation figures in Germany, and over in the US, the release of their latest CPI figures and jobless claims. We'll give our thoughts on the CPI situation later in the video. And also on Friday sees the release of the latest CPIs in China, which we'll also take a look at in more detail afterwards. And finally on Friday, updates on the US retail sales and the Michigan confidence numbers. And the companies that we'll hear trading updates from this week start on Tuesday with LVMH. On Wednesday, global food, snack and beverage manufacturer PepsiCo are due to release their Q3s, which we'll be discussing afterwards in more detail. On Thursday, EasyJet will be releasing their full year results, and again we'll give our thoughts on this in a moment. Thursday also sees results from BlackRock, Walgreens Boots, Entain and Delta Airlines. And finally, Friday sees a flurry of banks kicking off Q3's earnings, with results due from JP Morgan, Morgan Stanley and Citigroup, all of which we'll take a look at in more detail at the end of today's video. And also reporting on Friday, Wells Fargo and United Health. Well, last week, the stronger than expected US non-farm payroll dampened any expectations that the Fed could be looking towards a dovish pivot. Instead, stocks dropped and the US dollar rally resumed. And this week, the focus remains on the US, with the release of US inflation data and the start of US earnings seasons, kicking off on Friday with the banks. So let's take a look at this week's biggest stories in more detail. Well, Tuesday sees the release of the latest employment data here in the UK. Well, the UK jobs market has shown resilience, even as the cost of living crisis deepens, and of course the economic outlook deteriorates. Unemployment in the UK is at its lowest level since 1974 at 3.6%, and vacancy rates remain high at 1.3 million, meaning that wage growth is unlikely to slow rapidly. Expectations are for 128,000 new jobs in the three months to August, up from 40,000 in July, which is still strong. Meanwhile, the unemployment rate is expected to rise to 3.8%, and that's up from 3.6%. The cost of living crisis could mean more people are returning to the labour market, increasing the rate. On Wednesday, PepsiCo is expected to show resilience when it reports its Q3 results this week, thanks to its product mix and the reach of its brands. Wall Street is expecting the soft drinks and snack producer to report a 2.7% rise in revenue in Q3 to $20.7 billion, as weaker demand in soft drinks is expected to be balanced out by solid growth in Frito-Lay and Quaker Foods in North America. Meanwhile, on a geographical breakdown, stronger sales in North and South America are expected to offset weaker sales in Europe and Asia. Forecasts are for earnings per share of $1.84, that's up 2.9% year on year. PepsiCo has beaten EPS forecasts in the last 14 quarters and sales guidance over the past 20 quarters. Well, the minutes from the September FOMC meeting are set to be released on Wednesday, and this was a meeting where the Fed raised interest rates by 75 basis points to 3 to 3.25% and signalled that more large rate hikes would come. The meeting pushed the dollar to a 20-year high and two-year bond yields over 2% for the first time in 15 years. The meeting was more hawkish than expected and showed the policy rate rising to 4.4% by the end of the year and 4.6% by the end of the following year, as the US central bank reiterated its commitment to fighting inflation. Investors will scrutinise the minutes for signs that policymakers are concerned about the impact of the hawkish policy on the US economy, as growth is expected to slow to just 0.2% in 2022 and, of course, on a wider scale, its impact globally. EasyJet is due to report full-year results on Thursday, at a time when its share price trades at a decade low. The airline has dealt with several headwinds across the summer, including surging energy prices and large-scale travel disruption, as airports struggle with soaring passenger numbers. In Q3, EasyJet reported a loss of £114 million, after the summer travel disruption set it back £133 million. Meanwhile, passenger numbers rose to 22 million, and EasyJet operated at 87% capacity in 2019, which is expected to have risen further to 90% in Q4. Well, Thursday also sees the release of the latest CPIs in the US. In August, the headline CPI was 8.3% year-on-year, down slightly from 8.5% in July and 9.1% in June. Now, there had been expectations of a bigger decline to 8.8%. Core inflation, which strips out the more volatile items such as food and fuel, rose from 5.9% to 6.3% year-on-year and 0.4% month-on-month, showing that the rise in inflation was broad-based and more persistent than expected, fueling expectations that the Fed could continue to raise interest rates aggressively over the coming months. In September, core inflation is expected to rise 0.3% month-on-month, which will keep the hawkish Fed message in place. The US Central Bank is unlikely to start easing back on rate hikes until there is clear evidence of a sustained decline in inflation. Well, Q3 earnings season will kick off this week with the banks Citigroup, JP Morgan and Wells Fargo reporting on Friday, followed by more financials the week after. Q3 has seen a steep rise in interest rates, which is beneficial for net interest income. However, there are growing worries that interest rates will be raised too far, which could tip the economy into recession. This would mean less demand for loans and more money put aside for bad loans, although this is expected to be more apparent in coming quarters. These earnings are likely to be strong thanks to several jumbo-sized rate hikes. Concerns over the outlook for the US economy mean that IPOs and mergers are likely to be down. Well, China releases its latest CPI figures also on Friday, and Chinese inflation came in at 2.5% year-on-year in August, slowing by more than expected as the COVID lockdown hit and impacted spending. Inflation is expected to rise to 2.8% in September. However, this isn't likely to affect the People's Bank of China's scope to cut those interest rates. The data could also highlight the difference between the US and China's economies, as US inflation remains elevated. The data comes as China's mainland equity markets reopen after the Golden Week holiday. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from Taylor Wimpey, WPP and Tesco. And in the FTSE 250, we'll hear from Howden Joinery, NCC Group, JP Morgan Emerging Markets Trust, Balanced Commercial Property Trust and Ruffer Investment Company. So there you have it. The US dollar keeps strengthening, interest rates and inflation keep rising, and several economies keep getting closer to recession. In other words, it's all more of the same, while central banks and politicians play the balancing act, pretending to know what they're doing. Well, whether some of them do or not, at least we here at Atlantic Capital Markets do know what we're doing to ensure that our investors stay on the right side of that balancing act. So, as always, thanks so much for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates, with, of course, our expert market analysis and opinions. And also, if you haven't tried it already, why not download that app to your phone or tablet if you do want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.